Thank you to today's sponsor, North One. Link in the description down below. Hey everyone, me Kevin here. I have a thesis about this market, and this is somewhat speculative, but it could end up proving to be right, and you might be able to make a lot of money with this strategy, or you'll just lose lots of money. I have no idea. But it is a strategy that I'm going to be focusing on heavily, especially if this rotation continues of positivity coming back to the markets. No guarantees, of course, that the double top isn't in and that we're not crashing back down. No guarantees of that. We had a little bit of a green day today. Okay, great, but that doesn't mean the Santa Claus rally is here to stay. I hope it is. I really believe that our economy is extremely strong. Our companies are extremely efficient in America. The American economy is going to grow at the strongest pace that we've seen since prior to the pandemic, or relative to prior to the pandemic. I think we're going to grow at a phenomenal pace in 2022, even without stimulus. We're not going to grow as much as we did in 2021, but we're going to have growth, and we've got extremely efficient companies. We're going to see a lot of innovation for the next coming decade. I do think that the element of this frugal decade, a concept I talked a lot about sort of towards the beginning of the pandemic, is something that could end up becoming true. I think the last year we've kind of all been just spending money, but now it's going to be a little harder to keep that money flow going. It's just not going to be as easy. It's going to take a little more effort and might get a little burned out trying to grind for some more money. And I think spending is going to potentially decline relative to 2021, but I think we'll still be on a nice path of returning to prior to pandemic levels. With that said, I'm optimistic about the market. I'm in this market. But there is a cat and mouse trade that I believe could potentially be happening right now. Now, without sharing this particular source that I have, because then I'll get in trouble, it's worth noting that there are companies, and I have a subscription to this company. There are companies that provide data to hedge funds, and this is not the Bloomberg terminal, it's a different one. It's a different subscription that costs actually more than the Bloomberg terminal cost me. And what it does is it provides hedge funds and institutions, the suits, with inside data about specifically what retail investors are buying. So I'm going to give you a quick example of what it is that I look at by drawing it myself, because then I can't get in trouble, okay? So I might be able to go look at AMC, let's say, okay? So I go look at AMC, and I could see, all this crazy activity of volume back in, February and March or whatever, after the GameStop, all the madness, right? When prices go into the moon. Then you see this massive lull up until recently, towards the end of November, when AMC started falling, and all of a sudden you start seeing these spikes of retail activity. Like in the summer, we actually went negative with retail activity on AMC, just as an example. But I could see the same things on other stocks as well. I'm going to give you a good example here. First, a quick message from our sponsor. North One is the perfect tool for small business owners and entrepreneurs. Why? Because North One is a mobile business banking app built specifically for small businesses. Their app gives you access to many and plenty of features, so you can manage your money from anywhere. This means you can effectively manage your business's finances with tools like mobile check deposit, cash withdrawals, and the ability to send and receive ACH and wire payments. All of these features mean you never have to go into a bank branch again. I hate going into a bank branch to send wires. It is the worst. If you could do it online or ACH is online, thank you for North One making that easier. It also integrates with popular accounting softwares to help save you hours of manual bookkeeping. It's worth noting that North One is currently offering all of my viewers $10 when you open and fund a new account for a limited time only. It only takes 3 minutes to sign up, so if you want to get your free $10 and check out these small business features over at North One, please do so in the link down below in the description. Get that $10, get that deal, and take your business banking to the next level. It is Corsair, okay? Corsair or Lemonade or Shift. There's something really weird that when these stocks first really got talked about in social media, they had their social media spikes of retail activity. Then that sort of died. The companies had their first declines, so larger declines. So Lemonade going from 80 to 65, you saw a big spike. Shift going from 750 to 650, big spike. Corsair going under 28, oh my gosh, big spike for Corsair. And so you saw this sort of retail spike as people were buying the dip. But what's really crazy about almost all of these companies, and they have something really unique in common, is that the retail buying activity has kind of done this. It's tapered off. It's kind of died. So when I go into these charts, I'm like, man, retail just ain't buying the dip on these anymore. And it kind of makes sense because we're not really hitting a floor. I mean, Corsair, maybe we just finally hit a floor. Maybe at $20 we hit a floor on Corsair. Shift Technologies, I mean, I'm glad I'm out of it because this has been a crisis here, but there's no clear floor here yet. Lemonade maybe has its floor at $40. Like maybe we're finally bouncing off of 40 a little bit, right? But there's something really unique that all of these stocks have in common, okay? And this is what you want to write down because I think this is really critical. And then I'm going to give you some examples, and then I'm going to give you what I'm calling this strategy, okay? And there's still more work to do. There's more research to do on this. And I think it really depends on, before we get really excited about the strategy, it's going to depend on how the market reacts. Because if we have a red day on Wednesday, red day on Thursday, then and there's no Santa Claus rally, great. But this could change very, very quickly. So I might reference the Santa Claus rally and go, okay, like this might be time to go. Obviously, as always, if you want to follow every single move I make, check out the Stocks and Psychology of Money group. I post every move that I make. And do keep in mind there is a coupon code for all the programs. You could even bundle up for the new program we have coming out, The Path to Building Your Wealth. That does expire on the evening of Christmas Day. So Saturday, expiration in the evening of Christmas Day. Okay, so what we have here are two things that we want to watch. The first thing that we want to watch is low retail activity, but it's not just that, folks. It's not just that. You want to combine low retail activity or potentially low overall volume. You want to combine this with high short interest. Okay? Why? Because there's a cat and mouse game, and that's the name I'm calling this. I'm calling this the cat and mouse game. Okay? The cat and mouse game is you've got the hedgies going, okay, we've got an uncertain market. What are we going to do? Well, they're hedgies. What do? They're going to hedge. Hedge means they're going to short. But what are they going to short? Is it better to short a company that has a lot of retail activity, or is it better to short a company that has little retail activity? Think about that for a moment. So would it be better, and then we're gonna try to prove this here, okay? Would it be better, just logically, if you were a hedge fund, would you rather short a company like Lucid or Rivian, which when they run like 10 to 15% in a day? Would you rather short a company like that? Or would you rather short a company like Corsair that seems to just be magnetically stuck at $20, $21, okay, whatever. So if the market falls, these small caps get beat up more, but they don't really have that retail army going, buy the dip, diamond hand, yo, right? That's dangerous. That's how the hedgies get screwed. And so the hedgies learned that with GameStop and AMC, that if you're going to short where the retail buyers are not. And so ironically, the hedgies, maybe unironically, I suppose, well, whatever. The hedgies are monitoring the retail buyers' activity to make sure they're not getting short squeezed. It's not just this one app that I'm using. JP Morgan also, and the app's like $3,000 a month, okay? It's not worth pitching it because, I mean, whatever. But the point is, watch for this, because the hedgies are using programs like this, and JP Morgan's using stuff like this. They even have their own software like this. And what they're trying to do is prevent shorting companies that have these sudden retail explosions. And again, Rivian, Lucid, if my theory is correct, Rivian and Lucid, they might have a higher short interest, but they're not going to have as high of a short interest as the companies that also have low retail activity. That is the key. That is the magic to this, okay? So let's test this together live. And I have a list, but I'm going to give you the most up-to-date numbers with you right here. So we're going to go to this program here. This program is the S3 Partners short interest database. And what I'm going to do is I'm going to look at the Lucid short interest, and you'll see the short interest is sitting at about 12.1%. Okay, so there's some short interest. That's okay. I've shorted Lucid too because we knew it was likely to go down. Same thing with Rivian. I made money shorting Lucid and Rivian. That's fine. Short-term trades. Rivian's only 3.9% short. Relatively low short, higher retail interest. And that's a critical key to pay attention to. Higher retail interest, yeah, okay, we're gonna be a little more careful with the shorts. Where are they going then? Well, again, let's look and prove the theory. Let's look at companies like Lemonade, Corsair, and Shift, okay? So here we go. Shift, let's hit enter. Fallen out of a little bit of retail favor lately, 25.26% short. And it's at bottoms. Look at Corsair, 31.9% short. Look at Lemonade, 34% short. Tattooed Chef. Let's go ahead and pull this one up as well. Although what I'll also do is I'll also pull up to see what the retail activity on Tattooed Chef has been. I believe it's been going down, but I haven't checked that one recently, so I'll check that really quick. Let's do another one here. So that's 33% short on Tattooed Chef. That's high. That's pretty well up there. I mean, out of NASDAQ 3000, you're up there in terms of probably top 20 most shorted stocks once you're over 30%. Oh my gosh, retail buying for Tattooed Chef, there's like nothing. I mean, there's more outflow. The last time it ran up to $18.50, there was a big outflow of retail buyers. Again, I can't show you this particular chart. I wish I could, but I can't. Okay, ARK Invest. Let's do ARK. So ARK actually has been getting a lot of retail buying lately. Well, as soon as it fell under 100, we saw a surge of retail buying here. Not very, very heavy. I mean, nowhere near the retail buying we've seen in the past, but way more retail buying. Now, ARK Invest is an interesting one. ARK Invest is kind of in the middle. It's 15.25% short. We just had a massive retail exodus of about $95 million. Now, ARK is an interesting one. This one has big retail outflows, and then the next day it had a big... Now, ARK Invest is kind of in the middle, 15.25% short, and sure enough, when I look at the retail flows, over the last 3 months, we've had a lot of retail buyers actually leave. The price has dropped, so we've seen some bar charts to the up, but also still seeing some negative bar charts to the downside. So you're kind of having like this mixed middle bag there. Let me look at another one, FUV. So FUV is Arcimoto. Arcimoto is sitting at 31.5% short, and retail buying has plummeted. Virtually no retail buying. Like the last time we had some retail buying seriously was like June. If I go out maybe to the 2-year view here on Arcimoto, we're probably going to zoom out a little bit more to, oh yeah, bigger retail buying in, looks like June and in January. That's when we had our big retail buying, especially in June when we had this big, or in January when we had this big skyrocketing of the price. Retail buyers seem to come out when the price goes up, or the price goes down, but sometimes you buy the dip too early. So AMC, 1667% short. It's actually, in terms of retail buying, had a lot of retail buying. Surprise, surprise. The short interest is much lower than Corsair, Lemonade, Tattooed Chef, and Arcimoto. Where, I kid you not, where the retail buyers are not buying is where the hedgies are. So if you're looking for where the hedgies are shorting, right now, it appears to be Corsair, Lemonade, and I'll disclose my positions as well. Arcimoto, DraftKings is only 12%, and Tattooed Chef. That seems to be, those are some of the biggest short interest plays right now. And I think we're going to see this play out a little bit, where if we start getting 10% runs on like Tattooed Chef, Lemonade, Corsair, and whatever else the other one is, Shift Technologies, right? And then all of a sudden people are going to go, oh, is a run starting to happen here? I think you could see a really quick short squeeze set up here, and it's going to be cat and mouse game again. You're going to see the hedgies try to bail out of there, and they'll cover, and you might see some pretty big runs. So I think there's a potential here to make some big dollars on some of these where, again, you have a very unique combination. Low retail activity now, but high short activity. It's no guarantees. I could be totally wrong. I'm disclosing all of my trades to course members, of course, as always. I will disclose to you that I do not hold any positions right now in Tattooed Chef, Lemonade, or Shift full disclosure, I hold nothing in those. At least I believe I don't hold anything in those. I'm pretty sure I don't hold anything in those. Maybe I have like a tiny little fraction left over somewhere, but it'd be a fraction. Nothing intentional. I do have calls on Corsair though. And I do think that Robinhood's gonna move, but Robinhood is a different kind of play from this strategy because Robinhood's not really shorted much. So anyway, just some thoughts. It's what I'm calling the cat and mouse game. If we continue to see green, like if we see green tomorrow and green Thursday, and then we have Christmas and people are all euphoric for the end of the year and we see some more green next week, this short squeeze could play out. So pay attention to these. Again, no guarantees. I love you. I also love you if you check out that coupon code down below and check out those programs on Building Your Wealth. You won't regret it. People absolutely love these, especially our private course member live streams I hold every day the market is open. Thanks so much for watching. We'll see you soon. Thanks. Bye.